So I observed two things. One, clean rejections at the deviation bands, which leads to an immediate reversion back down towards VWAP. So those are some nice type 3 short trade examples. And actually, so we're going off book a little bit here, but I do want to draw your attention to this section of the chart too. Notice that we had made 3 lightly lower lows. We had been trying to push lower with each batch of selling. But upon getting back above the -1 deviation band, instead of the aggressive selling taking place, instead of the aggressive selling taking place or continuing lower and lower, what ended up happening was we got back into the slow lane and experienced a type 3 long trade. Now the difference is here, draw that for fast lane just to be clear on what I'm showing, slow lane and fast lane. The reversion trade that set up here was the fact that we made a new low and then immediately saw some buying pressure, which is contrary to what we'd probably expect if the market were going to go lower. It would have held at that deviation band and continued selling off aggressively. So even if it doesn't perfectly rally right up to the dev band and then reject, what we're really trying to take advantage of is a movement from the deviation band back towards volume weighted average price, when the market is effectively downshifting out of the fast lane and back into the slow lane. And that would be a type 3 long trade. Classic type 1 short opportunities here and here. So now the reason these are type 1 short trades are because they are a retest of the volume weighted average price. And they can occur pretty quickly and violently, which is why we have to be on the lookout for these opportunities where we retreat back to the volume weighted average price. The reason this is such a juicy trade is because can you imagine going short with a stop just inches overhead before capturing significant downside movement, right? It's very asymmetrical and favorable relative to the amount of risk we're trying to take. Any retreat back to a volume weighted average price, especially one that is still aggressively downtrending throughout the day, can be re-entered or resumed at the volume weighted average price with a very tight stop. Now, would we have known this was going to make it to new lows for the day? Probably not, to be honest, right? But nevertheless, it's still a very, very successful entry, not knowing what's going to come next. And I often tell traders, you can only nail down the amount of risk you take. You can't really know the magnitude of a chart movement. You don't know if it's going to go for $10 in your favor or 10 cents. So we have to kind of continue to gauge as the slope develops over the course of the day, as it responds to or respects the VWAP or deviation bands, either better or worse, what we tend to expect from that market. So I'm going to just draw lines to the different areas in which we intersected or came close to interacting with the deviation band. I guess you could even call that an opportunity, though it doesn't go much lower. The one point of challenge here would obviously be this kind of difficult blurb in the middle of the day. However, when we zoom out a little bit, zoom out again, and we can actually see what was really happening there was the market had kind of started to flatten out, attempted a brief reversion, but then maybe 20 minutes later fell back below into the fast lane again. Really tanked into the end of the day. So these opportunities that we saw before to be able to re-enter, I should use a different color for this, sorry, to re-enter in the direction of the trend, yellow being the direction of the trend, obviously. These are all great individual perspective entries, even during a strong move. So we've all probably been there before where we've seen a market get going in a given direction. It feels like it's already gone, and we say, oh, I can't possibly get aboard that. That train is already a-rolling. Continuation trades, trades specifically at the deviation bands, are really helpful for that because they give us some structurable support or resistance where we can enter that trade, and we don't have to wait for it to pull back to the VWAP. This is one of the weaker stocks today, right? So if we had waited for it to come back to the VWAP, we'd still be waiting. It didn't get back to the VWAP at all throughout the day. And what's exciting to me about this chart is that it shows a bunch of unique and interesting kind of different styles or character within a market. Look at how today we had a phase where we were oscillating at VWAP and we were contained within the deviation bands. VWAP was fairly flat, so we had a bit of a range-bound section in the middle of the day. You can actually see down here that slope really not doing very much at all, right? However, look at once we break out into the fast lane, we actually hold support at it right there. Nice uptrend and really nice slope too. Look at how consistent that slope is on the VWAP. Now, not a massive move on the day, but I like the fact that we go from a phase of very sideways deviation bands to expanding deviation bands. And if you guys remember, that's me kind of pointing out that that transition point is right where we're seeking to trade. Somewhere right around in here would be an optimal entry. Whether you get it on the pullback to VWAP or the cross into the fast lane, both of those would be good entries. Actually, from a couple days ago, so this is the day of earnings, but look at how we downshift from fast lane into slow lane. This market was rampantly running up. I think it gapped up pretty well and then held some support right at the deviation band and continued even higher. But when it couldn't break any higher, couldn't hold at the deviation band, when it couldn't bounce or rally and sustain that trend, look at what we got. A type 3 reversion trade right back to the VWAP. What's kind of exciting about this is that we don't necessarily need to wait for an exact carbon copy of one of the 3 trade types or patterns that we're looking for. We can just broadly assess a crossing of one lane to the next, from the fast lane to the slow lane, as being indicative of more movement to the downside, right? A reversion, a pullback. Sorry, that's a really crappy arrow I just drew there. But a reversion or a pullback inward towards the VWAP, rather than the kind of repulsion that we saw here. Now we're getting magnetic attraction. And that's because we came out of the fast lane and into the slow lane. Speaking of kind of a flat VWAP, broad containment at the deviation bands, little bit of oscillation. I mean, a very ugly sideways day. So hopefully you guys are seeing the difference between something like what I'm drawing a circle around right now, what I'm drawing a box around right now. The difference is obviously trend or counter trend. And learning to avoid or expect less of the counter trend days, that was essential for me to move away from trying to make every day a big breakout. Every day had to be a giant day. Nah, not necessarily. I needed to wait for the appropriate setup and then trade those days accordingly. Another aggressive fast lane trend to the downside for a majority of the morning. Look at how the slope started to wane, go back towards flat, right? The intensity of VWAP's movement started to decline or get less and less intense. And that foreshadowed a bit of a move back up towards at least the deviation band, if not also to the VWAP. It's interesting that we couldn't get out of the fast lane. We couldn't get out of the fast lane. Couldn't get out of the fast lane. We broke down to a new low, and then when we finally got out of the fast lane, the first thing to happen was, instead of magnetic repulsion, which we had seen all morning, magnetic attraction, right back to the VWAP. Do you remember how before I had mentioned that VWAP has inertia about it? It tends to keep doing whatever it's been doing until something causes it to change. Notice that the market was no longer breaking down. It certainly wasn't breaking up. So we weren't in the fast lane in either direction. That means the slope of VWAP completely went away. And instead, we had a relatively tame sideways VWAP. You can actually see here it looked like it was trying to reject off of VWAP multiple times. Once it crossed, it rejected off of VWAP. It just never really went anywhere. There was no selling pressure. There was no selling pressure. There's no buying pressure. There was no buying pressure. So I'm trying to, indicate to you guys is that there are two distinct phases of market going on here. Kind of grouping, right? The trend phase and the counter trend phase. And if you as a VWAP trader get really good at distinguishing those two options or those two styles, you are going to be a happy camper, my friend. This is what I was saying before about it's a broad articulation of what the market's likely to do, as well as a tactical trade entry tool. So you may recall me talking about this. This is only loosely related to VWAP, obviously, because we kind of abide by the deviation bands. A little ugly in here, but we abide by the deviation bands and then really rip up to that secondary high. Near vertical move that flattens out but still moves in the original direction, followed by that third stage, that second vertical element. Here's the first one that we saw, the kind of flagpole before consolidation. Notice how it really does try and stay in the fast lane a majority of the day until it makes a weaker, lower high, retreats back to the deviation band, and instead of bouncing at all, instead of rallying at all off the deviation band to try and stay in the fast lane or continue higher, nope, not at all. Melts right through and gets back in that slow lane behavior of sideways consolidation. You can actually see the slope waning or trailing off down here on that indicator as we make our top. And it's not necessary that we're even going to participate in it until here, but recognizing that it is not only a move upwards and a flag or consolidation, but it's continuing with that. Let me draw in a different color. It's continuing with that organic curvature and swooping to it. That's a beauty. Very directional day after a very counter trend or non-directional day. So look at how flat that volume weighted average price is on Friday's trading. Very much a counter trend day. Brief little excursion outside into the fast lane, but other than that, very contained at the deviation bands, absolutely oscillating across the VWAP, right? By contrast, what do we have on today's trading? Strong trend. Just a beautiful two little kisses off of the volume weighted average price. And notice, yeah, this almost is kind of like that upward consolidation we talked about in like a single helix pattern. But really it is just fast lane all day with a nice pullback right in here for a type 2 entry. So in the event that you didn't get aboard during the early morning hours, and I wouldn't blame you. That doesn't look like a particularly clean type 1 as it's happening. I think afterwards, having seen it broken up and out of that consolidation, and now threatening up into the fast lane, that'd be a little more exciting of a trade as the mid-morning goes on or as the morning develops. Just climbed at the deviation band. Look at actually on that prior day, we had some significant selling down from the dev band, down from the dev band, down from the dev band, and it finally makes a low, starts recovering or retreating. Today, coming in and consolidating, and then deviation band up, deviation band up, deviation band up. And then later in the day, look at how this doesn't materialize into anything that threatens to go to a new high, right? It actually comes back and touches that dev band multiple times. And each time it really weakly pops up off of it. Very tame. And that's the kind of downshift or coming out of this rampant fast lane move all the way back down to the fast lane divider and eventually into the slowly. But to that point of like an intraday slowdown or stopping the behavior that we have been observing before, let's actually do this because we've got this option within the study. We're going to change and turn on the fast lane highlighting to make it ever more clear. To wait and zoom the chart back a little bit. There we go. Yeah, the beauty of seeing it highlighted like automatically for us is the fast lane is readily apparent what type of behavior we tend to get in that. Look at how the market attempts a type 2. It tries to rally off the deviation band. And what do we observe? Not making a higher high. It's a very weak bounce off the deviation band, less than I would have expected if this market was destined to stay in the fast lane and continue higher. So instead of staying in the fast lane, maintaining support, maybe building a base and then moving up and off of that, it shifts from clean fast lane momentum to more ugly trying to get back in the fast lane, trying to belong in the fast lane. So we're not cleanly in this lane. We're not cleanly in this lane. We're oscillating between the two. But as it makes one last attempt, still can't break that high. This doesn't count as strong fast lane activity, right? We've already had incredible slope. And now it's flattening, kind of waning. And we can't really live up in the fast lane. So with those bits of information, flattening slope, can't succeed in the fast lane, has already done a big run up and now no longer belongs there. What do we expect? Magnetic reversion back towards the volume weighted average price. And don't get me wrong, this is not a bearish stock. It had a big run up and it's reasonable to expect, okay, we can't bounce off the dev band. We can't oscillate around the dev band. I mean, now we can't even get our head above prior highs. If anything, that would be a sideways or bearish stock, right? Or I shouldn't say bearish, it just sideways to down from an intraday perspective. And now we're going to look at the same chart basically, but in a completely different sector. So this is CAG, ConAgra Foods. I'm sorry I'm not able to do it on 2 days so we can keep the scaling very similar, but because it gapped up so much. But again, we have strong, obvious fast lane activity. Does this look familiar? Right? A bounce off the deviation band that can't get up and challenge new highs. Then we shift to that kind of oscillating behavior we were talking about. Not sure on which side of the fast lane divider it belongs. And then woof, right back down to volume weighted average price. Later in the day, of course, after a successful bounce off the VWAP, so it's still a bullish stock, it still had some buying pressure. It got up to the +1 band and absolutely rejected almost on the nose right there before coming right back to volume weighted average price. So this is the kind of behavior that we observe on different stocks, different sectors, different sized stocks, but the visual behavior is similar. And do you see how we're talking about this idea of downshifting from the fast lane into the slow lane? When that transition occurs, that's a nice reversion trade setup, as well as, had you been long previously, riding the kind of wave to the upside, wouldn't you agree that detecting, I'm going to keep drawing this in kind of different colors so we know what we're drawing attention to. These transition phases around the deviation band are really critical at detecting, how should I be positioned? Should I be aggressive? Should I be cautious? I mean, goodness, later in the day, actually, we get the same kind of run up towards that deep band. A little cleaner over on CAG, obviously. So this should, hopefully this is very encouraging for you all to see, saying, okay, so he's showing me two different charts that are very similar, even though they're not related. What does that mean? It means that the principles behind this, the principles of VWAP that we're talking about, apply in a kind of disparate, broad fashion to any, I shouldn't say any, almost any, nearly any, likely any chart that we take a look at. So what were the clues that we had that this trade was setting up so decently off the deep band for a big break higher? I mean, a couple things. First of all, uptrending VWAP, market willing to get in the fast lane and already doing its kind of oscillation or like uncertain dance at the deep band, right? So it wasn't stuck in the slow lane. Actually, you can see, look on these prior days, when we are stuck within this deep band range, even on a big volatile day, look at how roughly flat the VWAP is and how choppy and back and forth the market is. Same during actually this phase, right? When we're stuck in the slow lane. But then as the market picks a direction, gets in the fast lane and insists or refers back to that kind of reference resistance in this case, or support in this case, it's a rare touch of the deviation band, but it had already kind of broken out of the prior, and that's not a perfectly flat line, but you get what I'm saying. It had broken out of the prior day's high and prior day's range. And in a sense, it really just set up a nice flag here, some support at the deep band before moving to range expand, meaning to start curling. You can see here, curling the deviation bands. Let me do this in a different color. Curling the deviation bands outward, right? As the market pushes to a new range extreme. And then here later in the day, obviously slope is already still pretty strong, very directionally decided. And that's your first real pullback after launching up off the deviation band, and it succeeds. So that's really critical too. You know, compare that mentally to seeing a market do something like this. It bounces up, comes back down to the deep band and wobbles, and then falls. The difference is in that we actually succeed. Can't draw this very well. We actually succeed in here at continuing to progress higher. The price action confirms not only was there support at that level, but there's follow through from that. And again, like I said, you know, we're already supported roughly by that prior day's high. Not that I'm much of a firm believer in those levels, but just simply it's a reasonable reference point to say, hey, we were kind of trapped in like this price box on the prior day. So if we break above it and then come back to kind of test effectively that level, it's not crazy to think that it would actually respect that and bounce higher. Nice rejection right at the volume weighted average price. Obvious and declining VWAP and declining multi-day VWAP as well. We don't even need to draw that in. You can kind of imagine the VWAP from that prior day just continuing to trail lower. So a decided bearish environment really doesn't survive at all above the volume weighted average price. So even if you were tempted to go long here for a cross back above, let's just assume you got everything completely incorrect about this trade. you would have very quickly, 5 or 10 candles after that, kind of acknowledged, yeah, I don't belong in this trade anymore, right? We've been above the VWAP for 5 candles, and we're back below. This is not setting up and offering the kind of support that I would have anticipated. Whereas if you were looking to re-participate in the significant downside trend, brief little reversion back up, and then more downside trend, well, absolutely. A kind of unidirectional VWAP all day, downtrending all day. That's what we look for, right? Something that has not really flattened out, is not really appearing to challenge the VWAP in any meaningful way, both in price crossing or in high volume, none of that. What's interesting about this, not only was it a significant gap up, so we're talking, roughly a 10% gap up, something like that. So that's a very substantial range to be dealing with overnight. And no earnings, it looks like. Traded up off the opening range, found some struggle at the 1 deviation band, and more struggle at the -1 deviation band. Kind of appears to just be making a bit of a wedge, or a flag, if you would, right? Just some consolidation after this first big run up before moving higher. Now, the entirety of the VWAP trade that we're pretty much going to be dealing with is going to be after the break of the VWAP, after the break of the deviation band, or on the retreat back to the deviation band. I mean, those are our 3 potential entry points. Do you guys see how using a little bit of traditional technical analysis context is going to kind of put you in the right frame of mind for, hey, guys, let's zoom out on this. This thing gapped up. It's consolidating briefly. If this gets back above the VWAP, it is going to fly. This first breakage of the VWAP is our first, potential bit of excitement. We've observed some support down at the -1. Probably not going to take the trade there. As it confirms back above the volume weighted average price, then we have a decent setup. Even if we're going to structure the trade with 1 full deviation of risk, which is quite a bit, so we'd have to keep our share sizing lower, what we're effectively saying is, look, I'm going to trade a risk appropriate number of shares. Knowing that my stop is wider on the chart, I can still control my dollar risk through my position sizing. So that's our first potentially aggressive trade. More confirmation as it breaks into the fast lane, starts to be some slope on the volume weighted average price. And after that initial run up, then we're looking for a retest at the deviation band. We're looking for some confirmation that this thing belongs or wants to stay in the fast lane. Looking at the kind of early morning aggressive, not only gap up, gap and run that fails to maintain in the fast lane. I feel like you guys have heard me say this a couple times, right? That's our early or initial clue that this isn't going to be a maintained or trustworthy continual breakout. This is not going to be necessarily a directional day because it can't hold at the fast lane, can't offer any support at the volume weighted average price, and again, no rebound from the -1 deviation. So our 3 points of interest, the +1, the VWAP, and the -1, all failed to offer that kind of initial support. Let's zoom in on this and get a little more detail. Really, what damns this chart to the downside is the inability to recover above volume weighted average price. And even though the VWAP slope flattens out, you can see this down here on the aspect indicator that we are waning, we are moving back towards the kind of 0 line. Notice that the market never really challenges any space above the VWAP whatsoever. It's like a fish trapped under a layer of ice, right? Even if it wanted to jump up out of the water, it couldn't, right? This is a zone that the market cannot live in or exist within. Multiple tries at the VWAP and stuck really in the slow lane to the downside. Offering some support here, it's unwilling to break down. So again, we're kind of anticipating sideways behavior, sideways movement for quite some time. As it then mid-afternoon, lunchtime, whatever you want to call it, it's definitely picked a direction. It lives on one side of the VWAP, not the other. It's not oscillating like we'd expect in a complete counter trend environment. It is definitely rejecting at the VWAP, The VWAP is lightly downsloping, and we are living on one side of the VWAP, not oscillating across both. So it's starting to tilt or feel a little more bearish. Another clean rejection right at or near volume weighted average price, reaffirming that there is, let's say, either selling pressure or the absence of buying pressure to get it up and over that average price. At the very least, if this market was going to be going any kind of bullish capacity, you'd expect it to oscillate across the VWAP first before maybe picking one side to work with, right? This market couldn't even oscillate. It couldn't even go back and forth across the VWAP. It would basically get up to the VWAP and be rejected, back up to the VWAP and be rejected, and it'd be constantly challenged there. So as this kind of midday triangular flag, whatever you want to call it, like behavior breaks downward into the lower fast lane, we don't have that highlighting on, but I think you guys are starting to see it at this point. We break down below the -1 deviation band, really start slowly churning to new lows, but this last move is pretty violent before a bit of a reversion back up near the 1 deviation band. At the end of the day, you know, we're talking 2:30, 3 o'clock Eastern. Not really an optimal time to try to set up a trade. I might have been tempted for a reversion all the way back up to VWAP, given that this had a moment where it could have sold off, could have gone considerably lower, but it didn't. No type 2, no continuation trade. So the slope was going to again flatten out. We were more likely to get back up into this slow lane, out of the fast lane, and therefore experience magnetic reversion back up towards the VWAP. Wasn't really the case though. I would not have, I should say, would not have expected this aggressive move back down to test the lows necessarily. I would have been anticipating sideways or sideways to up. So I kind of dodged a bullet and dodged a decent trade at the same time, I guess, right? Neat opportunity here with the rejections at VWAP and then the breakdown of that triangular consolidation right around the fast lane divider. I can observe that it came down to test the prior day's close effectively. I'm not drawing that line perfectly, but that's the level at which it closed the prior day. Could never really get back down and meaningfully challenge that. After the gap up, a little bit of mid-morning rejection at the VWAP. There is a trade there, but again, you'd have to be pretty, excuse the turn of phrase, ballsy to be able to take something that's gapped up that considerably and continue trying to trade to close the gap at what, 9:40 in the morning, 10 minutes into a gap up or something like that. As it stabilizes and gets out of the lower fast lane, look at how there's a period of time where the VWAP is very flat, very sideways, right? We are just momentarily contained. The deviation bands aren't expanding. We're chopping or oscillating across the VWAP. We're not really sure on which side we belong. But then as the market enters into that upper fast lane and the slope, which obviously just looks ginormous because we had such a volatile and directional day, but the slope absolutely ramps up into that fast lane behavior. So what we had seen before was kind of contained by a prior, whoops, did not draw that appropriately, sorry guys, prior level of support effectively. And then we got clues again at the deviation band, at the VWAP itself, and then at that upper deviation band. Look at this support. And then later in the day too. That would have been a very hard trade, I think, to stick through had you watched that kind of parabolic run up, single helix-like structure to it. So yeah, having seen that kind of a parabolic run up and then coiling, which breaks lower, that would have been difficult, right? Breaking, especially those, you know, couple candles down below the deviation band, that would have been scary. However, I want you to also ponder, let's draw this example. So we have our rising VWAP, got our deviation bands, and then price breaks down below the deviation band and then rockets back above it. Now you may have been stopped out at some point. Let's draw, let's do blue. let's say you were stopped out at some point just below the deviation band, hoping and kind of holding on to that support or banking on another continuation trade, movement up and off the deviation band. If you're stopped out of that trade and then you recognize moments later that we're back in the fast lane, realize that you might be able to take a trade structured against that prior low for maybe half of the size, maybe 2/3 of the size, maybe put the full trade back on, depending on your risk tolerance. I mean, the way I'm thinking about this is I would rather continue participating in any behavior that happens in the fast lane, so long as we stay in the fast lane. If we're not staying in the fast lane, then I need to get out. In fact, if we're violating that prior low, I really need to get out. But in all of the scenarios, I'm pretty comfortable staying in that trade and letting it develop so long as it's in the fast lane. This kind of brings us back to something I'd said during, I think it was week 1, but the idea of thematic grouping data according to its kind of story. What we're basically saying is, I want to buy this stock so long as it gets in the fast lane and is likely to stay in the fast lane. If you told me there was a stock that would get in the fast lane but not necessarily stay in it, I don't want that. And if you told me there was a stock that wouldn't get in the fast lane but would stay above the VWAP, well, I don't necessarily want that either. I want a stock that's going to get in the fast lane and experience that kind of rampant up move. I want something that's going to live in the fast lane and sustain activity there. So we can see that according to obviously how rarely it interacts with the deviation band. If it comes to the deviation band and sits there for 15 or 20 minutes, probably not as credible of a trade opportunity as something that rejects near instantly, because that shows the kind of story behind the institutional trade support there. They see it coming back to that deviation band and say, wait, guys, do we really need to wait for this to drop back to VWAP? Like, that's too patient. We're waiting too long at that point. Let's defend it here at the deviation band. And you see that kind of like quick pop. So we're looking for something that even when it rejects, we're looking for something that even when it fails below the deviation band, if it recovers, it's still a structurable trade, meaning there's still tight enough risk characteristics that I'd be happy to put on that amount of risk for significant fast lane opportunity, provided we actually are already back in the fast lane. We're not anticipating it. We're waiting for it to actually confirm by getting back up in the fast lane. Let's say we got stopped out. Very tight stop. I agree. Probably shouldn't be that tight, but let's say we did get stopped out. And then we recognize, let's say we recognize up here, we could enter the trade again. With risk below that prior low. You see how that's still pretty minuscule risk. We are back up in the fast lane, so we've already seen some confirmation. Does that make sense? Look at this series of struggling new highs. Big candles that then collapse. Big candles that then collapse. Third big candle set that collapses. And then as it fails to reject, meaning it doesn't bounce at the deviation band, it doesn't continue up in the fast lane, it just melts down. Tesla, very contained between the deviation bands. You can see multiple examples of that, very flat VWAP. So again, kind of a boring setup intraday for today. One thing I will draw your attention to is, what was this? Yesterday's trading. Morning consolidation that breaks in a direction. And when it falters or fails to type 2, you get a mean reversion. This is just like a very traditional pattern we observe, kind of a downshifting from the morning fast lane, a little bit of a move up, and then instead of coiling and recovering up here, right? Maintaining new highs, maintaining the fast lane, maintaining slope, we actually get back into the slow lane. And that creates that kind of magnetic attraction back towards the VWAP. Maybe we don't hold it all the way for the sell-off down to the -1 or trade it back for a reversion back here, but we at least recognize this is a very flat volume-weighted average price. Is there any slope down here, right? Same thing towards the end of the second half of the day here. Absolutely no slope. Went through the morning gap up because of the market, right? Just floating with everything else. No pun intended, carnival, floating boats. Fell below its volume weighted average price, and then one reject. It doesn't quite get there, so we can't really count that as the second rejection. Second real rejection right at the VWAP. And from then on downwards, I mean, recognizing, for example, that a type 2 has occurred, that a type 2 trade is occurring here, but it's also failing, meaning it's not continuing lower and making progress. In fact, it's actually being magnetically pulled back up towards the Div band, which foretells magnetic attraction back up towards the VWAP itself. I would have understood staying with this trade for the sell-off and for a bit of consolidation. But I think, yeah, once I would have observed that, which looks like a perfect time for it to really get its butt in gear to the downside, for that to fall apart, I definitely would have been out of the trade as it breaks back above the -1 Div. So really, when we look at this, the safe entry opportunity, somewhere around VWAP, tight stop, quarter of a deviation, just a little bit above that structurable prior high or the little swing high we had here. And if you end up getting out at or near the -1 deviation band, maybe not a monster trade, but a more predictable trade, a clean setup, 0.5%, give or take, in the afternoon, 2 days after Christmas, not bad. A great example of a downshift pattern, kind of like we were just describing, right? Very much success at the deviation bands. Great find on this chart, man. This is really a nice one. That eventually breaks and cannot get back into the fast lane. Goes through a bit of a reversion instead. So this is a good example of, let's clear these drawings, of rampant success from the deviation band that's making aggressive new highs, followed by kind of a very weak new high and an attempt to bounce off the deviation band, but then it crashes down through. So we get a lot of evidence very quickly up here that that was a short-term top. We'd have to react pretty quickly to it. But you can also kind of see the slope waning. The intensity of that market is waning or dropping off. Tight consolidation in the morning, making a bit of a wedge, and then picks its direction. Slope, volume, fast lane, all at once.